Hello and welcome to this Automotive Management live virtual interview with Marshall Motor Holdings Chief Executive Daksh Gupta. Daksh, thanks ever so much for joining us today.
Hi Tom, good to see you. Thanks for the invite.
For those of you who don't know me, I'm Tom Sharpe, News and Features Editor at AM Magazine, and today the intention is really as part of Automotive Management Live virtual to gain insight from Daksh, not only about last year's challenges and how Marshall faced those, but I guess just as intriguingly how the business plans to approach the year ahead and the challenges a little more uncertain, I guess, that are going to face us over the next 12 months. So we've got some quite good questions for Daksh, I think, in the hope that we can tease out the nitty gritty, a bit of insight and a bit of detail that will help listeners. So Daksh, if you're happy to get underway with a few questions.
All good, thank you, Tom.
Great stuff. I mean, we've spoken a lot recently, and I think you've made yourself quite open, I would say, over the last 12 months to media outlets, and certainly as our conversations have revealed to colleagues within the business as well. And I know there's been a lot of appreciation of that. But you've certainly, like many retailers, openly admitted it was your most challenging year in automotive retail. I just wondered if you could look back, I guess, to March, April, May time last year. They were the definitive months, I suppose. What would you say were the key decisions you made throughout the year, but particularly in those early stages, that helped the business survive and thrive and pull through as it did to the end of 2020?
Yeah, thanks, Tom. So I think in terms of it being the most challenging year, I think I'm pretty certain that everyone you speak to is going to say exactly the same thing. I mean, 2020 for many people, and it doesn't matter whether you're a CEO for a business or whether you're a general manager or whether you're working in the organisation and you've got all the issues that come from, be that childcare, mental health, be that looking after elderly parents, the concern that you have that goes with that. I think for everybody connected with 2020, which is everyone, quite frankly, they will have had a very difficult year, no question. Plans disrupted, holidays disrupted, Christmas disrupted. So from a business perspective, as the question really relates to that, I think there's no question it was a challenging year. And I think that if I kind of replay in my head how it all sort of panned out, all of us had sort of heard of this virus thing happening in China. But we've all seen these before. We've seen SARS previously, and we've never really had anything like that come over to the UK. And I think in your own mind, we sort of watched it unfold in Italy, and Italy was shutting down. But I don't think people really thought it was going to come to the UK. As anyone, I think there was, I seem to recall sort of towards the end of February, maybe mid-February, there was first case of COVID-19 reported in the UK came out, and that's when you thought, oh, gosh, this is something quite serious. But albeit you see the TV and you've got the Prime Minister going on TV shaking people's hands, but nobody knew what was going on, and I think there's no sort of playbook as to how to manage these situations. But I do remember, from our perspective, we were announcing our results on the Tuesday the 13th of March, and we were pretty upbeat. We got a really good set of numbers again, which we were really pleased about, and that whole week for us was booked in the city, literally back to back meetings with investors. And then what started to happen is on the Tuesday we did the results, and then we started having cancellations. So on the Wednesday we were like 1 cancellation, 2 cancellation, on the Thursday 3 cancellations, and by the Friday we only had 1 meeting. And the whole city had cleared on. I remember being with Richard, our CFO. We were in, he likes Starbucks a lot. So every Starbucks he stops at, and we stopped at the Starbucks at Paternoster Square where the stock exchange is, and it was dead. It was worse than a Sunday. And that's when it really started to come home that this is quite serious. Albeit I still think people at that stage weren't, really taking it seriously, I think, in many cases. I mean, from our perspective, we started to keep a tracker as our management population. So one of the things that we did really early on, and I'm really glad that we did it, is I started to chair twice a week executive committee meetings. So one on a Tuesday, one on a Friday, which I chaired, and I actually kept the minutes. I did the minutes myself, which is quite unusual, but I wanted to have fast notes, of what the actions were, who were doing it. And I think also when you do the minutes yourself and the actions yourself, I didn't want blown out minutes, just wanted to capture actions. When you capture the actions, then you know, right, who's doing it, when by, etc., and you're on top of it rather than somebody else doing the minutes. And we've kept that tracker going, and so far we are up to 530 actions we've done since the COVID-19 crisis began back in mid-February. And I'm really glad we kept it, because people have said to us, oh, when did you first do that? And we were able to go back and say, right, on that date, that's when we made the decision, that's what we did, and everything's recorded. It's absolutely fantastic, and I'm really glad we did that. So that was, from a business continuity perspective and communication perspective, it was key. And we just simply, right, what are the issues? Let's discuss them. What are we going to do? What's the plan? Who's doing it? And by having that central log, that's how we've run the business. And as I said, over, well over 500 items. And actually, I'm pleased to say that list towards the end of last year pretty much came down with all the actions done. But of course, with the last Monday's announcement, it's been quite busy. I think the other things for last year that was, very difficult for people to manage was when the Prime Minister on that Monday evening, which was Monday the 23rd of March, said, we're going to lock the businesses down. And I think from our business, what we did is we were watching the figures that previous week, and we were, if you remember, one of the first companies, if not, I think the first company in the sector to say we're shutting ahead of the Prime Minister. So we were watching the figures on the Thursday, Friday, and I was thinking, I don't like the look of this. I was watching our people, I was getting emails internally, people were scared. And you were watching other countries shut down, and we're thinking, how are you going to control this? And in the end, I had an emergency meeting with my team, and we literally worked all week until quite late on the Sunday evening. We said, we've got to shut the business down. And I rang the chairman first thing on the Monday morning, which was the 23rd, and said, I think we've got to shut the businesses down. And, to make that call is pretty brave, I think. To shut 132 odd operations with 4,000 people was a brave shout. And actually, I felt vindicated because some 12 hours later, Boris said, we're shutting you down. So I was really proud that we made the decision to do the right thing. So we called it absolutely bang on. And then, of course, as the year unfolded and you got sort of, click and collect services reopened sort of, second, third week of May, and then the dealerships could open in June. Of course, we then all experienced that massive pent-up demand. Then you've got into, the second lockdown in November, which I think didn't hurt as much because we found after-sales was very resilient. It was almost like, not quite business as normal, but it wasn't far off business as normal. And then, of course, you had click and collect services. So very interesting dynamics in each lockdown. And, of course, here we are now in 2021.
Yeah, I think we started our conversation last week with you saying Happy New Year, happy lockdown. That is the most positive approach I could have imagined.
I've changed it now, Tom. I've gone Happy New Year, Happy New Lockdown, Happy New Tear.
Oh dear. Well, I think you said at the time that some industry colleagues feel you're a bit too positive, but I would hope that Marshall colleagues sort of appreciate that approach. Do they? Do you think that that's necessary to sort of pervade throughout the business at a time like this?
I think I've always been a naturally positive person, Tom, always throughout my whole career, and I have a positive outlook on life. I think it's very easy to get your head down, very easy. And I think it's important. Okay, I think, forget me for a second. I think if you're in a leadership role, you have to try and keep your organisation up. What you can't do is bury your head in the sand and pretend nothing's going on. You've got to be real. I think one of the other things that's worked brilliantly in our business, albeit it's been a huge pressure on me personally, is you're probably aware we've been doing videos on a regular basis. So I started out the first video back in, must have been before we even shut the business down, just to say, look, we're aware of the issues. Please be assured we're taking your health and safety, the health and safety of you, our valued colleagues, and our customers incredibly seriously. We're aware of the issues because we were getting lots of emails concerned for people's personal situations, which I completely understand at that point. So we started doing videos, and typically sort of 5, 6, 7 minutes long. And back then, in fact, somebody asked me this literally last week because I recorded the 45th video since the pandemic started. They said to me, I bet you didn't think you were going to be doing nearly 50 videos. I said, I can absolutely tell you, no, I didn't. But actually, I think what's been quite interesting with this, I think it's given the ability for people to communicate directly with me, with the management team, with my top team. I think we have a very open culture in our business. You'll be aware we've been 11 years in a row Great Place to Work status, 7 years in a row in the best UK workplaces. So we've got a really good culture in the business anyway. But I think it's funny, people sometimes have a perception of you, whereas when you're in their living room via video, on a every week type basis, letting them know what's going on, I think they get to know you. And including last week, I had the joys of the dog yapping in the background, and people were emailing, didn't realise you got a dog, so I had to send some pictures of the dogs and stuff. So I think we've kind of really made it real, and I think we've got a real family. One thing is when we listed the company back in 2015, I promised everybody we weren't going to lose that family feel as a business, and we've really stuck to that. And one thing I was really proud of, we did at the back end of last year for Christmas, because we couldn't have Christmas parties. We surprised everybody with Christmas hampers for chocolate. So, and we had 4,000 of those delivered, which is fantastic. So if you go all over social media and see #MarshallChristmas, it's brilliant, absolutely brilliant. And it was a surprise, but it kind of kept that whole family feeling together with the business, But I think the videos have been incredibly powerful, because the trouble is, in big businesses across multiple sites, people like to make rumours, whereas if you've heard it straight from the horse's mouth, not saying I'm a horse, but if you've heard it straight from the CEO, then there's no, what's going on, then you know exactly what the decisions are. And I think we've got, I'm always very transparent. You'll hear it as it is. I'll give my honest assessment, and sometimes people might not like what I want to hit, what I'm going to say, but I'll always tell the truth, and I think that's incredibly important. Likewise, if people ask me a question, I guarantee you'll give you an answer. You might not like the answer, but we'll always tell you what the truth is on a particular situation. I think that's incredibly important for us.
Yeah, absolutely. No, I've seen some of the transactions on social media. I know that relationship's now strongly forged. If it wasn't before, certainly. But I mean, clearly there's been an awful lot of work to do over the last 12 months as well, and we've read various reports that give examples and case studies about the amount of advancement that's taking place in automotive retail. I think one report said 7 years of evolution had happened in just 7 months in the sector due to the onset of COVID-19. So I wondered if you could give me an insight into how the changes that have been made within Marshall will benefit the business sort of going forward into 2021 and beyond, really.
Yeah, I think there's quite a significant number, actually. I think probably the two biggest that I can name straight away, which everybody will say, I'm sure, when they're asked that question, is this. If you had said to me in January last year that you'll be sat at home doing every single one of your meetings at home, I'll be like, Tom, I want to go and meet people. I want to see people. I want to interact with people. I'm not somebody who wants to sit behind a desk, But actually, it's worked quite well. It's worked quite well. And okay, I still don't think it can replace that meeting people face to face, because I think that personal interaction, I think, is, that's just a personal preference. But actually, in terms of getting stuff done, it's actually quite efficient. And if I look at the benefits of meeting times now start bang on time, on the hour or half hour, they finish on time, rather than overrunning. And I think people are a lot more disciplined as a result of that. You haven't got all the travel hassle. If I think about some of our head office roles, our divisional roles, some of those guys are running around the country, if they've got a division to run, actually, this can work quite effectively. Now, it doesn't be, to my mind, it absolutely should not be. When we get through this, I still think it's incredibly important. You've got to be in the sites, meeting people. You can't replicate a feel of what's going on in a business, because if you're having a review if you're doing a review with the general manager and your franchise director, all you get to see is what that general manager has in their office, or a background like I've got on my screen right now. So I think it doesn't beat somebody going on site, looking at the site, talking to people, getting a feel for what's going on, and I don't think you should ever replace that. And there are certain roles I don't think you can replace that via team working. Yes, you can drive efficiency out, and I think this has probably been the biggest one. I think the other thing as well, if you look at the evolution of how customers behave, if you think the number of cars, I think through the lockdown period we sold 3,700 cars. 3,700 cars without a customer taking a test drive. It's remarkable. I would have never said that. Now, of course, a lot of those customers are buying new. So, when you buy a new car, it will be perfect because it's a brand new car by definition. So I think a lot more consumers have got more comfortable with that. Now, when we reported that stat in the interims, yes, it was 3,700 cars, but it was massively down on the 19,000 that we sold the previous year. But again, what it showed is how we could be agile, we could adapt, we could handle customer inquiries. I mean, right now, we're locked down, as we know. But what was quite interesting is a lot of companies such as ours have been doing systems developments. So one of the things we launched, relatively recently, and actually I have to say for a second time, because we had reserve online on our website, must be 5 years ago, 6 years ago, but to be honest with you, hardly anybody used it. So we said, well, we're writing a new website. If no one's using this, what is the point of having this function on there? So believe it or not, we took it off because no one was using it. So we've relaunched it, and I think in the first 3 weeks we've sold over 100. I think it's 110, 115 cars in 3 weeks, which is quite interesting there. And again, when you look at the dynamics, again, very early to form any conclusions, because I don't think 100 is enough to give you any sort of concise data, not when a group like ours sells over 100,000 vehicles on an annualized basis. So not enough robust data, but some quite interesting trends. One, the overwhelming, and it's stark, the overwhelming vast majority of these customers don't negotiate on the price. They're literally saying, I'll reserve that price, and they pay the screen price. Yes, that's reserving it, but what we then see is they one or two of them do have a little bit of a negotiation, which anecdotally, and I accept danger of contradicting myself with a small number with a little bit of data, but it does show that consumers generally don't like that sort of haggle part of the process, which I get. I completely get it. It's for some customers, it's not within their comfort zone. There was a significantly higher proportion of women than we've ever seen before, and again, that also tells you about the I wouldn't say anecdotal, because it's factual data that we've seen over many years, that women generally don't like the sales experience within car showroom industry. One of the reasons why we've been heavily investing in our gender balance strategy over the last 5 or 6 years now. We've got 17% of our sales team now female. Not enough. I'd love to see that 1-to-1. That's going to be the goal. But actually, what's quite interesting is a much higher proportion of women online than what we're seeing coming in the showroom. So again, I thought that's quite interesting as well. So people are, and the other thing was, whilst we took over 100 orders, actually quite a number of them cancelled, again, which also gave me comfort that, one, the numbers were very small in relation to the total percentage of what we sell, but that said, you've got to keep an eye on it. You can't bury your head in the sand and think that's the end. We're not going to have car showrooms. I think that gave me a lot of comfort that actually people do want to come and see their cars. And even the small percentage that did transact, actually, some of them, when push came to shove, when they saw the vehicle, actually didn't go through with it because it wasn't what they thought it was, which again gives you reassurance around how many people are going to buy it and transact online. So I think what the pandemic has done is forced us to try these things. It's forced us to try different working patterns. So we've looked at working patterns with some of our teams as well. And in fact, we're doing that again this week in light of the pandemic. What can we do to minimise the number of people coming into the show, into our day-to-day operations, primarily to de-risk to mitigate the safety risks that we may have on site. So that I would say they would be the key learners, but there are many others, of course, Tom, as well.
So I mean, I guess in light of that, I mean, quite apparently, that the key thing about this year has been the issue was with physical contact, and I know it's very difficult to speculate, certainly at this stage in lockdown 3. But can you foresee, as a result of the changes that have been made, how disruptive COVID might be in 2021?
I think in terms of disruption to the year, I think clearly the first 2 months for sure are going to be disrupted. To what extent, who knows? To what extent, who knows? Is it 30%? Is it 35%? Is it 40%? No, I don't envisage it being back into April, which was down 90%, unless, of course, the government puts really strict measures into the business. But it's hard to say. I think anybody who can judge what is going on is kidding themselves. And we track inquiries, we track order take, we track invoicing literally religiously. I know exactly where we are by the day, literally by the hour, because we're looking for trends. Because what you're trying to do is match up your resourcing levels versus what the demand is. I think the other thing I'd say is, in terms of What impact do I think that will have? It could potentially impact March, is something we have to consider as well, because of course what we saw in March last year, a lot of people were disrupted because, sod's law, the lockdown came in the busiest week of the busiest month, and actually in a period that was actually quite busy, because a lot of businesses came out of the turn of the year into 2020 having had clarity on the election and therefore clarity on a Brexit deal. And whether you were a Brexiteer or whether you're a Remainer, and I don't do politics at all, and I never want to comment on it. That's I have a personal view, but I'm not going to comment on it. But whichever side you are on, I think you would say, if you're a Brexiteer, you'll be saying, hurrah, we're leaving the EU. And if you're a Remainer, you would have said, well, okay, it is what it is. Boris is in now. At least we've got clarity and we can move on as a country. Might not like it, but at least we've got clarity. So that gave a huge amount of optimism going into the new year. And I think one of the things you're going to see is that did, March, I think a lot of people who I've spoken to, they actually said they were on track to have a really, really big March last year. So that potentially will have an impact for us in March this year, but nobody knows at this stage. And certainly after, 6-7 days trading this year, I don't think, we as one company are not ready to wave the white flag yet. It's too early to call what will happen. But I think the other interesting thing is the dynamic. You are seeing some companies give up. Some companies say, right, furlough everyone, but there are consequences for furloughing people. There are some people who live on their own, who will struggle with mental health. There are some people who need mobility. There are some people who are reliant on us being there, which is why the government has said we can offer click and collect services.
Okay, so I mean that's a statement of intent right there, I guess, in the year ahead. But strong brands, I suppose, with quite a lot of sort of crucial new product coming this year as well, isn't there? Do you think there's enough traction in the market now with the challenge that we have to get that sort of EV product line really gathering momentum?
Yeah, I think so. I mean, I think one of the things, if you look at a lot of the brands that we partner with, again, I won't rattle them all off, but if I take the ones that we're quite big with, if you look at, say, we're number one group for Volkswagen in the UK. So you look at what Audi's got coming this year, phenomenal. You look at what Volkswagen are doing, phenomenal, and because they're all on the consistent platform, the MEB platform. So you look at like the new ID4 that's just been announced back in the last year, that looks fantastic. You look at Skoda. I mean, Skoda's a dark horse brand, let me tell you. Skoda. You look at the new I can never pronounce right, Enya that's coming out. It looks fantastic. You look at what they're doing with Cupra, with Seat, that brand, that looks amazing. So I'm Volkswagen Group. Somebody once said to me, in fact, it was one of our non-exec directors said to me when we bought the Jardine businesses, you're already quite big with Volkswagen Group. Do you have any concerns that you're almost getting too big with them? And my response was absolutely no. I'd be very, very happy. Why? Because they're one of the groups that I think long term are going to do incredibly well. You then look at some of our other big partners. You look at BMW Mini, and you look at their product portfolio. It looks fantastic. You look at Mercedes-Benz with the EQ range, fantastic. JLR, the product, okay, whilst they've got some work to do in terms of getting their pure battery electric vehicles coming down the pipeline, just look at how strong the brand is. The brand, it's aspirational, so I'm not worried about Jaguar Land Rover. And I think over time, as they invest in new end platforms for engines, I think that will it won't be engine, it'll be motors, I guess, really. But I think the future there looks bright. You look at Volvo looks fantastic. So I'm very happy with the partners that we've got. Just want more of them. That's where we want to kind of grow with the existing brands, because again, where it works really well, it just bolts into our existing management structure, so it integrates seamlessly.
Yeah, I mean, we mentioned quite heavily there your involvement with the Volkswagen Group and your growth there in recent years. They are one of the brands, as we know, that's begun experimenting with the agency model in motor retail, which is something that has been a topic of debate for many years, but certainly over the last few months, it feels like it's becoming a little bit more accepted that it is something, particularly with the growth of online retail, that's going to start creeping into the business. You said previously in an interview with AM that you'd wholeheartedly embrace a shift to the agency model. I just wondered if I guess that still holds through, but what's your thinking behind that, and how far do you think that will transition, and what sort of timescale? Have you got any plan in that respect?
Well, I think the first thing to say, agency is nothing new. Everyone's talking about agency like it's brand new. Agency's been around for some time. I mean, agency first came into, we mentioned Volkswagen, came into Volkswagen fleet nearly 20 years ago, maybe 17, 18 years ago when I was over VW. Must be 18, 19 years ago. So this is nothing new. Agency has been around for some time. I think it enables the OEMs to take a lot more control over marketing, discounts, supply. So we shouldn't see that as a threat. I think people, because they may not fully understand what agency does and what the benefits are. Some people, because change is always uncertain, isn't it? It always unsettles people, and I get that. So I think for me, why I think it would be interesting to go agency, and I think would be beneficial, is one, I think the reality is this is just, I'll say, before I get into the individual things, I'd say I think this is coming. I don't think, I really do. I think it won't be big bang. It will be an evolution and an introduction as OEMs dip their toes in. I was reading an interview with Andrew Savas, and he was saying exactly the same thing. It will be, they might put specific models, like they might do certain electric models as an agency model agreement initially. So I think as long as we are making the same margin, okay, what's not to like? Okay, I think the other thing that's quite interesting is if we all accept that it is in the customer's interest to protect residual values, and I believe yes it is, because the better that residual value is, the easier it is for that customer to change next time round, the more cost effective it is for them in terms of their monthly payments, because we know 83% of our new car customers buy on PCP. Then why is it not a good thing to protect residual values by controlling what offers are out there in the marketplace? So for me, longer term, that has to be a good thing that the brand controls that, because whilst you've got this kind of push-pull dynamic, and you've got targets, and one dealer's desperate to hit a target, so they'll discount a car enormously, which then brings the whole market down. The model, it has a disproportionate effect on everybody else, if that makes sense, based on what that one dealer in the middle of nowhere is doing, because they're trying to hit target. And that's why you've got third-party websites who'll be able to bring that information to bears, and some of the channels I'm talking about, and of course that then affects the whole of the UK market. But ultimately, the customer's the loser over the long term, because it affects residual value. So I think the OEM having control of that, I think, is a good thing. The other thing, from a balance sheet perspective, it's transformational, because today we as retailers have consignment stock put on our balance sheet, so it's at any one time goes up and down with the cycle, depending on when you've got plate change month or potential crash out of Europe. So we saw a lot of stock coming into the UK back end of last year. So our stock can hit anywhere between typically 450 million at times, maybe nearer to 500 million. So all of a sudden I've got 500 million of stock on my balance sheet. Yes, it's consigned and it's funded, but firstly, yes, contractually you can send those vehicles back, but I've been in this 28 years, I've never sent a vehicle back, because it's better for the manufacturer to move that vehicle, because it's been in stock such a sufficiently long time that it has gone fully paid. Then you want to move that vehicle on, so it doesn't really come back, it doesn't really ever go back to the factory. So in practice, that consignment stock you are going to have coming to you one way or the other, and it's going to be registered to you one way or the other. So for me, all of a sudden, that is no longer on my balance sheet. That's now all gone from my balance sheet to the manufacturer. So that's 500 million pounds worth of stock off my balance sheet. Transforms. You take 500 million pounds off my balance sheet, that's transformational. Yes, the funding clearly goes with it, but guess what? So there's the interest costs. So I typically pay 7 million a year on interest costs, 7 or 8 million a year. So once that 500 million of stock's gone, so is all of that interest cost as well. Now, do I fully expect I'm going to get all of that? No, I don't, because clearly someone's going to have to pick up the cost, which will just end up being there. So that I don't see a situation where my business ends up being more profitable. I think the profit will be, profit's always to an extent regulated by manufacturers anyway. When times are tough, just as you've seen in last year, the manufacturers step in. Because we've got this symbiotic relationship between OEMs and retailers, and they come in and they help us. They give us bonus monies. They do delayed cash payments. And I, for one, like the fact that I've got, that I'm a junior partner with a big brother watching out for me, because they need to make sure we continue, which is great. So I think, they will regulate the profit, so don't think just because all the stock's gone and the interest has gone that our profits will go up. I think it will be regulated, but they will take that profit over there. But that's important for them, because what needs to happen is they need to make more profit, because the level of investments they've got to make around electric vehicles is significant. So they need to retain more of the distribution costs that are out there right now because of the levels of investments. You look at what Volkswagen Group invested, nearly 100 billion of investment in the MEB platform and other digital technologies and their EV strategy. So it's huge. So I think this will happen. I think the other thing with the whole agency agreement as well, I think it will be an evolution in. That's really important to understand. I don't see it's going to go big bang. What I think the risk to going big bang is, how do you then as a manufacturer handle part exchanges? How do you remain competitive in the marketplace? So I think it's going to be an interesting evolution to see what happens. But I do think overall, on balance, I think for all stakeholders, our manufacturer partners, I think our customers and our business, I think it's a good thing. And of course, the other thing is our returns will go up, because if you move all of that new car turnover, because all you're doing is invoicing and a handling fee, our turnovers, I anticipate, will come down by, say, 45% is my best guess. So all of our turnovers will come down. Our profit might remain the same, but of course, because the profit's now on a lower turnover, the ROS has gone up. Does that make sense?
Absolutely, yeah. One of the conversations I had recently was particularly in relation to PLCs, and I guess the investors that you have very well informed, and the same with other PLCs, they get an awful lot of guidance, but also they will be aware that automotive retail is a very low margin business. Do you think that drop in turnover that would come with an agency model might affect their confidence a bit?
Well, it can only be better, I would think, because what have you done? If your turnovers come down and your profit remains the same, your returns have just gone up, haven't they? So if turnover dropped, say, by 50% rather than 45%, well, your return on sales has just doubled overnight, immediately. So the quality of your earnings has got better. You've got less stock on your balance sheet because it's being moved over there, less interest costs. What's not to like?
Like anything, it's.
I actually, but I think there's an explanation piece that needs to happen.
Yeah.
And again, I don't see this happening over big bang in the next 2-3 years. I think you will see a slow evolutionary type introduction over the next maybe 5 to 10 years is where I think it will go. But I think investors will actually appreciate that. And also, I think we get hung up on we're a low margin business. Actually, the right KPI in many ways to look at is return on capital employed. If you look at return on capital employed, for a lot of businesses, they're double digit. Return on sales is only low because we're selling Range Rovers plus at £100,000 plus. So that's why return on sales is low. And I think people get a bit fixated on return on sales, whereas actually what you should focus on is what's the cash profit that's being delivered out of a particular business. And for our business, it's north of £44 million.
Yeah, absolutely. So a positive evolution from your point of view, certainly the introduction of agency on a greater scale.
Yeah, absolutely.
Great stuff. Well, I mean, I guess I was hoping to just bring it round. I guess we'll bring it round to the main subject again that we kicked off with, really, in terms of the way the sector's going to weather this year. Is the vaccine program sort of the great white hope? Is that the thing that you're keeping your fingers crossed for as much as anyone else, or are we still masters of our own destiny? You tell me.
I think all of us are pinning a lot of hopes on the vaccine. The good news is, I think for a lot of people, they came into 2021 quite optimistic because you got a Brexit deal done Christmas Eve, which had been, let's not forget, that's been casting a shadow over this sector now for 4.5 years. So that's good news. And in many ways, it's funny, isn't it? Because we've been talking about Brexit for 4.5 years, and it's just like dealt on Christmas Eve, and no one talks about it. It was a big deal. That was a big deal to get frictionless trade, particularly for our OEMs. And yes, there's still a lot to be understood, and what does it mean? What's the paperwork mean, etc., etc., etc. But I don't think we should lose sight of that. just yesterday, we've had now a third vaccine approved. So, I was reading this morning, 350 million vaccines have been ordered by the government. We've got 2.4 million vaccinated already. We're the fastest in the Western world. Only Israel and Bahrain are beating us. Okay, Israel have got 18%, and Bahrain have got 4%. It'd be fantastic if Boris and the government could pull off, the UK being first in the Western world to get vaccinated. So I think a lot of us are pinning our hopes on the vaccine. The faster we can do it, the better. It's great seeing some of the numbers come through that we're seeing, and I think that hopefully the quicker we can get those done, the better. And I think hopefully we can return to some sort of normality, whatever that will be. I'm not totally convinced we'll get back to, but hey, what the hell do I know? I'm not Professor Whitty, but I mean certainly, who knows if it'll ever get back to normal for the whole of this year, because he's certainly indicated that we'll see potentially further restrictions next year. But I think the most important thing is, what we're hearing is stick to the rules, stick safe, do your social distance, wash your hands, do all the basics and stay safe, and you should be okay with this. And then it's down to the vaccines, and let's hope they can get that rolled out as soon as possible.
Absolutely. And I think I'm happy to leave it there with a message of hope for the year ahead. Thanks ever so much for joining us, Dash, for this one of the first interviews we've done for Automotive Management live virtual. So I do hope that you enjoy that expo event as well as everyone else that's going to be watching the interview. Thanks ever so much for your time.
And thank you to the AM team. You guys have kept us informed throughout the whole period. It's been invaluable, certainly real reference points for us to check. And we do refer internally in our business what's going on, and we pick up the news. So thanks to Tim, yourself, and the whole team. It's been really appreciated.
Thanks ever so much, Das. I appreciate your words. Thank you.
Take care. All the best.
Bye-bye. Good morning and welcome to the Q&A session, which follows my interview with Daksh Gupta, Chief Executive of Marshall Motor Holdings. Welcome to AM Live Virtual, our first of a new format. We literally, due to the openness, transparency of Daksh in the interview, we have around 5 minutes to take some Q&As. And we're joined by Julia Muir, author, CEO of Gaia Innovation, and probably best known as the founder of the Automotive 30% Club. We thought it very appropriate for Julia to be here on behalf of the Q&A and interview sponsor CDK Global, as both Daksh and CDK's MD Stuart Miles are patrons of the Automotive 30% Club. So I guess I'd like to kick off the Q&A session. I guess I'll put this out to either of you. I just wanted to understand really, and I know, Julia, you've got a particular interest in this, how the last sort of 10 months and the restructure of automotive retail has affected that diversity element that's been pioneered, particularly by the Automotive 30% Club in automotive retail. What effect has that had on the staffing of the sector?
Well, shall I jump in then? So I think it's interesting to see how the leaders of the sector that had already seen it as a strategic imperative in terms of creating a more profitable business are still powering ahead and making sure that the activities that they're putting in place, that the actions that they're taking with regards to reacting to the pandemic are not detrimentally affecting their female employees. They're looking at schemes for flexible and agile working. They're looking at furlough schemes. But I think that there is the other side of the coin. Are the leaders that perhaps haven't still recognised the business case for gender balance and inclusion, and so therefore are not necessarily keeping their eye on the ball with it. And they will be the ones that kind of lose out at the end when there will be a race for skills as we get back on track and growth opens up again. There will be potentially an oversupply of people in the marketplace that have been displaced, but their skills may not match what we're needing at that point because we've transformed the businesses. And those that have set themselves up of having a reputation of being inclusive employers will be much more likely to be able to choose the best people to be able to fill those gaps. And I know, Daksh, you are definitely one of those people.
Yeah, completely agree, Julia. I mean, you're right. This is not a nice to do. This is a must do. This is the right thing for our customers. It's the right thing for our business, and I fundamentally believe it's having a hugely positive impact on our business. I mean, this is something we started actually about 6 years ago now, and working with Julia and the team at the Automotive 30% Club. It's just really taken us on even further levels. So, if I go back 6 years ago, we had around 6% of our sales execs were female. We're now up to 17%. Still not where I want it to be, but you can see. I think what we've got momentum and traction. And the other stat that I'm really, really proud of, not quite at 30%, but we're nearly at 30% in terms of people who are on our PLC board. In fact, we have 3 of our non-executive directors are women on our PLC board. If you look at our PLC board, our operating board, and our senior heads of function, we're just below 30% now. So I'm really pleased with that. And as I said, I think we've got momentum in our business, and it's having a very, very positive impact.
Do you feel, Julia, that perhaps the climate we find ourselves in, do you feel that female employees have been disproportionately impacted by COVID-19?
Well, there's lots of studies that are coming out now that are showing that, yes, that's definitely the case. So we know that in the US, there's been, I think, 156,000 jobs lost, 16,000 gained. But of the net, the 140,000 job losses are all women, according to that survey. And the reason behind that is because women are still stepping up to do the stereotypical role of the homeschooler, holding the fort back at home. And potentially also, you hear women say, my husband's job is more important than mine, which of course an employer of that woman doesn't really want to hear. So I think that leaders must have it on their agenda to make sure that women aren't being detrimentally affected, or their female employees aren't being detrimentally affected, and making sure that whatever they can do, they can help them be retained in the workforce, because as we know, gender balanced teams lead to more complementary characteristics that are actually important for business success. So to have gone to the effort to recruit these women and then to lose them because of an environmental issue that's happening all around us would be a real shame.
Okay, thanks for that, Julia. Daksh, we are very short of time, but we have got quite a few questions coming in. A lot of people praising your transparency and in the interview. But one question in particular regarding the agency model, and Gordon Mee has questioned. I understand he's a former colleague of yours. Will that agency basis of operating present a challenge to the industry, particularly in covering the overhead of some of the larger prestige operations?
Yeah. Hi, Gordon. Thanks for the question. Hope you're well. I don't think it will, because I've always had a very strong belief that we as retailers are part of the distribution network for OEM. And there is a symbiotic relationship between OEMs and retailers. So to an extent, our profit is regulated. When times are tough, as we've seen with COVID last year, manufacturers step in and help us. When times are good, maybe margins get pulled back, bonuses get pulled back. So if you look at the long-term average profits, typically sat at 1%. So I don't think that's going to be an issue. The OEMs will need to keep us viable and keep our operations going, so they will adjust.
Great stuff. Great. Thanks for that answer, Daksh. And I'm afraid we've run out of time. For more information from CDK, who sponsored this event, please do pop by their stand in the hall and enjoy the rest of your AM Live virtual event. Thank you, Julia and Daksh, for joining us for the Q&A.